Hello everyone, this is Manna Mahmood from Karigar, and Karigar is not a company, it's a community. And today we are starting a knowledge sharing series on ERP, and the very first topic will be O2C, order to cash cycle. That's the very important cycle of an ERP. And today's session is basically on the very core concept of ERP that should be known by everyone who is involved with ERP, from the employee of the company, any employee, any level of employee, and head of ERP and the developers and all people. They must know these core concepts. So let's get into that. So in any enterprise who are doing business, they must oblige by these three types of transactions when they are doing a business activity. So these parties we will define later, but to do a business we at least need two parties, and when something happens, a deal happens, or any activity happens in between these two parties, they must go through a legal binding like company to employee. There is a legal binding, we call it employment, and then there is legal binding between buyer and supplier, we call it order, and then there is legal binding between authority and the company, like trade license and other things, and these permission certificates. So this sort of bindings we basically know in our industry orders. So orders are basically legal binding document, and the transaction happens between these two parties. When this happens, then one party sends this order to other party, and that party sends invoices that appears as bill to the other party, and that other party then do the payment as the legal terms and conditions are applied in that previously done legal binding. So these are must. You have ERP or software or not, but you have this practice if you are in a registered legal entity in this land or any land basically. So you have to, your ERP must portray, fulfill these services, these transactions with proper audits, with proper configurations in your ERP. Otherwise, you will have troubles. So let's see a bit in detail. I have created a chart like from party and to party, and the legal bindings from and to basically you will see like company gives a legal binding employment to the employee, then employee gives the a bill or invoice, expense bills, if this is mentioned in the employment contract, he can give TADA, and then every time entries the attendance, he makes a log or report it to his supervisor, or the supervisor collects it, makes it like an invoice for approval. It can be weekly, it can be monthly, depends on that legal binding previously done in the employment, and that it goes to the company, then company pays him to the employee. So this from party and to party for on each layer changes. So legal binding goes from company to employee, invoices goes from employee to company, cash goes from company to employee, and you must understand these three layers must be three different modules or services in your ERP. They must not be a single module or a single service or tightly coupled. It should be loosely coupled, interfacing with each other with their own interfaces. Why this? Because this each layer got their own workflows, own business logics. Like orders, they have so many things like approval flows, budgets, and they have terms and conditions. They have to have compliance issues, and that must be made in that layer, in order layer, in that legal layer. And after that, the layer we are calling this invoice or commercial layer, this has also a different sort of business logics and workflow and in case of industry changes, manufacturing and others, it involves more paperwork, more tra- documents and business logics like LC. The bank involves, bank is another party, company is another party, they're having some deal against the water. So these are all commercial documents, and this layer, invoice layer, must be a separate service with its own capabilities that can be extended easily. And the payment or cash management, that is also a totally different module. It has its own capabilities, own workflows, and highly integrated with the accounting part. And if you've seen, I have already written over here, this commercial is basically referring in accounting as accrual, where the payable and receivable is determined basically. So having, if you don't have in your ERP these three modules separately, that will be a issue to think about. So you must consider this. We will show it practically a bit later in ERP how these three things have to be managed separately. Now come to another part. These three transactions, I am calling 3T, happen between parties for product services in exchange of money. That's a very common definition, understand, in parties. So these 2P, parties, or you can call people. And the people call, this not only people, we will show the hierarchy. Peoples means the company, then there is departments, then there are SBOs, then there is head of departments, then there is employees, executives, and then there are suppliers. Supplier can be an entity that can have their representatives. Customer can be an organization. It can have its own contacts, leads connected with that customer. And so this hierarchical relationship, everything in that is basically we can call parties. And in product or services, we basically can say make separate, like something is sellable and something is basically used as asset to produce or to do the business. But they are all in the core is basically a product. And in goods, you can see there are finished goods that can be directly sold, and there are raw materials that we purchase to create those finished goods or assembly those finished goods. But these are all basically called product and services. So let's define what is parties and what is product and services. So let's see the parties: company, customer, supplier, employee, authority, whatever people or organizations, group of peoples comes. They are common. They have common features. So they will have profiles. They can have accesses, logins, credentials. They will have role, the role of like who is superior to whom, who is connected with which company, who is account, who is lead, who is customer, who is supplier, who is supplier's representative, who is supplier's executive. Everything can be defined seamlessly, all these things. And the relationships, we can determine the degrees and the relationships. So here parties must be one service. So in maybe in ERP you can see different UI for customer management, supplier management. But if that service is in the back end, not single service, or data model is not connected, like abstract parties, and then it is extended to these types, then it is a trouble. Then it will be a lot of works unnecessarily, and you cannot extend it or expand it or reuse the features easily with these parties that engaged in the business. So here parties must be a singular service that must not be broken into different pieces. But here I'm saying totally contrary, that it must be separated services. All the transactions must be separated services: order services, invoice services, payment services. In case of party, it must be one service. So this is very important. In case of ERP, you must be aware of that, because you see the ERPs and you will see there is a whole supplier management, then there is a customer management. There can be UI and front ends, but if in the core they are not the same thing, they are not as parties, then you have to write modules and codes and other things, develop configurations for each of them separately, differently, logging them. It will be just a load of works done as unnecessary. And then this goods and assets. So again, it must be a single module, and this is the mother of the ERP. If you do it not properly, this is a planning phase, then everything is going to be troublesome. You have to suffer. So the asset management and the good management, whatever, it must be one single catalog where everything of the company must be enlisted or planned. So the catalogs and the categories. So why this is important? If this finished good and raw material is not properly mapped, relationship is not properly there, who is variant, who is configurable, who is composed of what, then you cannot create a proper BOM, bill of materials. You cannot do a proper quotation. That is harmful for your business. And if you do not have this proper catalog master data planned in a single source, making or getting the COGS will be very hard, and fully it take more time for the accountants and other people to find out those things properly. So and asset valuation and this asset maintenance, tracking your vehicles, your equipments and other things, if you have not considered it in a proper planned way and you are keeping it separately, then it will be another mess activity for you to do. So in a product catalog service, you can keep all the products. It can be asset, it can be sellable goods, it can be raw materials. Then it must have a feature to define those things as it is with its class and make the relationship in between them. So you can generate a chart or a easily you can draw a product layout easily. And so what is the takeaway from this session? Basically that if I make it a summary, that there must be a party service, a single party service that can deal with different types of parties, providing similar features. Even one can differ from others. The customer can have extra features, supplier can have extra features, but it is basically a party service. And then you must have a catalog service, product master data is another must have, and it will include all the assets, finished goods and raw materials and relationship between them. Then it can give you proper BOM and quotation, and you can have a proper COGS reports. And then we are saying that these three T's, order, invoice and payments, they must be separate services. It should not be normally you can see that sometimes it happens like that, order management module and everything is there, invoice and payments, but it should be totally separate. Order management is order management, invoice management is invoice management, payment management is payment management. So they must be separate modules. So let's see, we will do some practical exercise now. So the practical exercise we will do with this Moqui ecosystem, that is based on Apache Off-Base. It has improved UI and it's now better, neat and clean. And we will go to this demo link. So if we go to demo, yes. So the thing we are saying that we should have this party service, and okay, this is I have to log in. Okay, so we are into this party service, and if we see, there are all sort of parties and we can find here. Some are supplier, there is manager, there is tax authority, there is employee, and we can find the team, internal organization, career, supplier. Everyone is basically party, and each party you can create different parties, and then in party with that party model, the sales orders, the requests, financial models, everything is connected. Let's see, like anyone, maybe let's see a customer. So you can see this is common for any party. The phone numbers, addresses, the payment methods, their address, and there is a classification, their role, and there are other things. Important thing is he got financial info that can be referred easily, and related with that, what sort of payments or invoices he is connected with. Easily you can do it with connect with it. So if this is separate, I mean, it's not party, customer is customer, supplier is supplier, there is no common group or common entity model like party, then making relationships will be very ambiguous. For customer you have to have separate relationship, for supplier you have to have separate relationship, but if you have a common table like party, then party can be connected with all these invoices, orders, shipment, payments, and other companies. I mean, this person is connected with, can be related with any new relationships can be done with from one company to other company, with a specific role. He can be manager of a company, or he can be manager of a department. That department can be department of a company. So these sort of things easily, and the data modeling will become so easy to do. Like you can see, if we go to parties, so this is now, if we see all parties in single module, but maybe you don't like this way, you want to have a separate view, and you can call it like customers. So customer is basically nothing but a filter, role filter customer. So here it's the same thing, same party basically, but we are giving a view with a filter of customer. Similar way, maybe you want to have a supplier view of parties. So this is another filter basically, and depending on the supplier, you can have different field mappings and other things that if required, and this is pretty common if this is a party, connecting all the financial things with the party. So that's the thing. So this supplier, party, and other things, customers, employee, everything is basically known as parties. And then we are saying about this product, another catalog module. Here everything is basically, you can see there is finished good, there is equipment, there is asset, then there is raw material. So this is class, there is variants. Everything can be defined in this catalog module, and depending on its class and on its type, there can be a different like this equipment. This is something, it is a class of type equipment. There can be different, the fixed asset, then it can be an inventory, and then there is a class. You can have different types of things like raw materials, finished goods, and this way you can define things, and according to that you can add, like this is an equipment, you can add maintenance records, you can put it into a category, and you can associate different sort of things. It is composed of like bill of materials used to produce. So its raw materials can be mapped with it, and any documents and other things content you need to define this product, you can include it. You can have multiple prices depending on its vendor, and you can define it, different prices, types of prices, and you can have list price, current price, maximum price, promotional prices. You can easily define those things. So this is whatever the thing is, it's asset or a raw material or a product. It should be defined in a catalog, and it should be well planned and well mapped, and then you can call it a product master data. And there's those 3T. So first one was orders. So sales order, purchase order, whatever we call it, is basically order. So like I gave a sales order, it is coming with a filter, order type sales, like find options, sales order, purchase. If I give any, it will come up with everything. So there is no such a record maybe now, so it's not coming, but we can create a sales order easily. So store, we will define it later. This is a channel. We can define a customer if we have defined already anyone. So I'm just making a order to show it. So this is a separate order module. It can be a purchase order, it can be a sales order. It will have products. If this is deliverable, it should have a shipment thing. Then there is a part we can do it like make payments from information, add here payment gateways and other things. So from here, if the order is done and we have this, you can add a product like any product. So I can add the product. So you can add a payment maybe here from cash. So it will give you the option, and it has this different workflow, approval, place warnings. You can assign it or map it, who will do the what, and you can place this order. And though we have not settled the shipment things, the addresses, so it's giving some warning. Then you can approve it. It can be done by different people depending on the workflow. And when the order is in a settlement, you can create the invoice. So that's the interfacing with the invoice layer and the order layer. And the order layer has its own logics and own management, own terms and fields, and that kind of. So this is the invoice generated 051. So now the module you can go directly from here to invoice module, or we can go to invoice module in its own way. Like this is the invoices module. So we can go to invoice. This is totally a separate module. It has its own rules and regulations. Like if you go to this invoice, you can see this is a invoice connected with this order. Then it has its own audit log, and it is basically it has its own transactions, and it can be connected or related with these payments. The payment is totally separated from the invoice, and these invoices has its own workflow. It can be customized depending on the business. So finalize, cancel, and then there you can adjust whatever payment you want with that invoice. That invoice, the payment is different module. So this is one payment we have created on that order. Okay, so this payment is totally different module. If you go to this payment module. So you will see this is the payment, and it is connected with the invoice. It has its own audit log and own connectivity with these GL things. It has different uh, business logics for its payment method type, connectivity with the financial accounts, and it has its own workflow. It can be authorized, so the it can be delivered, it can be unauthorized, it can be void. So, and the way it will, and this is the way, if you separate it properly, you can map these payment items and invoice items accordingly to the GLs. And when you can have that, you can suggest this sort of mappings, like commission invoice will hit this accounts payable GL, supplier credit memo will hit this GL, item types can be mapped specifically with GLs. So this item type will hit this GL, payment types GL. So when you have this module separated, then the integration with accounting becomes as the company wants. When those three T's, the order, invoice and payment, are not separately and dealt as an individual module, it will be very hard. Otherwise it will become so smooth and easy, and the organization from the order to cash cycle can be mapped automatically. Thank you.